And across the ocean, that is real. So I'm not different. Won't be the last. Good morning, everybody. We will start our live stream in just about 4 minutes. Just a quick little update. We do have some of the equity indexes approaching our zones where we're going to look for a bounce just before the open. Main ones I'm watching right now are Russell and the Dow, because we're short the Dow right now. NASDAQ still has a ways to go, and S&P as well, as we keep breaking the Globex lows. I'm going to put the prep screen up here just for a moment. What we want to prepare for is the markets dropping a little bit. We look at Caterpillar, my gosh, IBM, Microsoft, these are huge down moves. Okay. At any rate, I'm going to put the prep screen zone up here so you can get your zones marked. There's a lot of information that's coming out. We had a lot of numbers that came out at 8:30, but we'll talk about all that once we get started here. So get started in about 2 minutes. So make sure you have your zones marked as far as the prep screen where we're looking for our opportunities. Okay, I'll be right back and we'll start in about 2 minutes. So nice here on hunger. This sea of heartbreak. You were see a tear, sea of heartbreak. How did I lose you? Where did I fail? Did you leave me? All right, good morning, everybody. Welcome to our live trading room. And we're doing a YouTube live here this morning. So I'm going to do a quick little pre-market routine, and then we'll jump out of the live stream and we'll jump into our community trading room, okay, where everybody has mic privileges and can share their screens. And as a community, we help each other trade throughout the session, okay? Hold on 1 second there. Got the sun coming up and can't see my screens right there. All right, so a lot of activity with some of the earnings that came out in the after hours with the Meta stock. And today we do have a lot of other earnings coming out. American Airlines, Royal Caribbean, Caterpillar, Philip Morris, Newmont Mining. I mean, there's a whole bunch of big companies announcing earnings today. Some have already come out in the pre-market, and we've had quite an impact, like Caterpillar down 25 bucks. Okay. Just taking a quick look over at Caterpillar. And come on. There we go. when we start looking for demand zones, we have to anticipate where the unfilled orders are. And this is what we teach at the TMI.com, is that we teach a lot about where the banks and institutions have unfilled orders by looking for resistance, and then the area below that resistance as a buy territory. Okay. Now we did the same thing over here with Meta last night, and we had our zone marked, a really small time frame down here about 395. Now, if we apply the the pre and post information there, we can see that. Oh, it's not going to do it on a daily chart, so let's go down to a 60-minute. There we go. We had that drop, and the thing is, when the market's dropping like this, it's looking for buyers. Okay, a large stack of buy orders. When the market's rallying, it's looking for a large stack of sell orders. Markets can only move up or down based off of the prints. You know, the buy tickets and the sell tickets are what make these markets. So what we're looking for is, where do we still have unfilled orders? Okay. So a few things out the gate as we're watching for some trades to come into play. We have entered a couple of trades this morning, and I'll come back and review those in just a moment. Okay. All right, so we have S&P still looking for the markets to go down. Now, what we have to pay close attention to right now is how big is that Globex range, okay? And as we compare that Globex range to the daily ATR, right now the S&P is kind of in the mid-range, so S&P is going to be kind of choppy, okay? We use this information, Globex range compared to the daily ATR. If it's in the middle range, we expect choppier market conditions at the open, a little more difficult trading, okay? So our first demand zone that we're looking for, 5,016 on the S&P. And right below that area, as we're looking for other obstacles, we have a gap to fill. We have an unfilled gap from the 19th, okay? Actually, yeah, start the 21st, okay? We right into buy territory, okay? So if you're looking at a bounce trade off of the S&P, about 5,016, okay? Looking for where the market might stabilize and change direction, you're looking just a little bit lower than that to about the 5,005 to 4,991, okay? They like to fill the gaps, okay? S&P is below the 50-day moving average, and we need to pay close attention to where the 200 is. As price is below the daily chart on the S&P, below the 50 simple moving average, we look for more bearish conditions, and we're certainly seeing a lot of those. Most of the retail traders step aside, price closing below the 50-day moving average. So right now, I'm not posting a lot of trades. We're gathering information. This is what we do as our live trading room on Monday, Wednesday, and Friday, is we do a pre-market prep, okay? We start seeing where the obstacles are, where the buyers may be, where the sellers may be camped out. NASDAQ, okay? As we're looking at the NASDAQ futures at the moment, our prep screen zone right down there about 17,024, 25-ish, okay, to about 17,146. Okay. Basically the same place. Now if you reduce your time frame, you'll find our signature leg base group of candles on a small time frame. I think maybe right around a 13-minute chart, okay? So looking for that area. Dow, we're still in our Dow trade from our prep screen zone just a couple of days ago. I just want to let everybody know there's only 2 micros right here. Okay. Now, many platforms out there only you don't have to put up so much margin, and a lot of the companies out there only use $500 margin per contract. So we got about $1,000 worth of capital out there that we're using, and we're up about $531 at the moment. Okay. So for 2 days trading, a 50% return on the capital that's being used. Now we're looking to take this trade back up. We have our first prep screen zone demand right there at 38,155. And as price starts to break down any below that, we want to look a little further over to the left. Okay.
Order filled.
As we're looking further over to the left here, we do realize that we have resistance and support. So there is what we refer to as a dead space right there. Okay. That's making this prep screen zone a little more elevated risk. It may get a short-term bounce off of that, but the real level that we're looking for is much lower. Okay. It's in a better location in the buy territory. Okay. What we teach in our Mastering the Charts Part 1 is that if we find the buy territory and we show where resistance is, the buyers are below resistance. Once we break through the resistance, we're looking for price to come back down to find the unfilled orders. Now, when we make a lower low before the breakout, we often find our zones in the lower 2/3 of this. Okay. All right. What are we looking at? Oh, we just got crude oil. Yeah, crude oil, we are looking at the basically a breakdown with the dollar and the yield smoking to the upside at the moment. Okay. So just a quick picture of that. In pre-market, we have the dollar and the 10-year yield. When the dollar and the 10-year yield are moving up or down together, this has an inverse reaction to the equity indexes. And you can see almost a mirror image here, both on, let's go to 60-minute. So we compare. So the dollar and the S&P futures, inverse related, okay? So as we're watching the dollar and the yield move up, we have to anticipate that the equity indexes are going to continue to move lower to find the buyers. Can you guys keep an eye on the waiting room too, please? Thanks. All right. So we have that going, and we also see that the pre-market indicator, okay, this is a NASDAQ pre-market indicator, it gapped back down, okay? So the NASDAQ pre-market indicator gives us an idea of the trader's sentiment at the open. Now, the NASDAQ pre-market indicator developed by the NASDAQ exchange has a 92% correlation as to trader's sentiment at the open, okay? So a gap down or a gap up implies that there's going to be more selling or more buying near the open. We use this as an odds enhancer, okay? Now that is correlated as well as we're seeing the dollar rise, S&P futures moving lower, and the NASDAQ futures also moving lower at the moment, okay? Another thing we want to check is the pre-market trend, okay? Since the economic report came out, the pre-market trend has come out and it is low, okay? So trend is low, time to go, trend is high, time to buy. So there's still more downticks and down volume on the New York Stock Exchange composite, the stocks, okay, at this moment. Again, a bearish signal. So no time to jump in and try to take the long at the moment, okay? All right, so we're seeing that crude oil had a bullish report yesterday and is still looking for buyers, okay? So we took the first part of this as a breakout. We're looking for the buyers to step back in right around that $80.68. Okay. The Globex range was more on the narrow side as we take a quick look at the the daily chart. See, Globex range was $2.12. Yeah, we're still kind of in the middle range there. What we use is a number between 40 and 70% of the Globex range compared to the daily ATR. We see that those are more choppier market conditions. Okay. So we have a strategy that we use called the open range breakout trade. Okay. And we recognize that when we have a middle range, Globex compared to the daily ATR, that it's a little more choppy at the open. Okay. A narrow range, we're looking for a pretty big move in the marketplace. Okay. S&P futures still popping lower. And we're about 15 minutes away from the market open. Everybody's running for the hills while we're waiting, and while the banks and institutions are waiting for price to come down to where the buyers are at. Okay. So our target for the S&P, looking for the buyers, roughly right around that 5,006 area. Okay. Another special note, identify what's going on with the percentage drop. By documenting the information that I keep sharing throughout this presentation here, there's a lot to look at, okay? Especially when we're trying to manage our risk appropriately, okay? We have to know things outside the market as well as those things inside the market, okay? Or on the price chart. It's not just the price chart that makes everything go. When we're in a trade, we need to say if it's still safe, okay? NASDAQ still making a new Globex low. We want to keep monitoring this because if the Globex range becomes wide, and Globex range wide to us means that the Globex range is between 70 to 100 and even more, Globex range compared to the daily ATR. So right now we're about 185. ATR for the daily chart is 336. We're getting into that wide range. Why is that important? Well, that wide range tells us to look for the bear trap or the bull trap. Okay, and chances are we're going to hit the bear trap. Okay. Dow is getting close. Okay. Now we're only expecting a bounce. Another key piece of information to understand about the equity index futures, okay, and the equities. Between 8 a.m. and 11 a.m. Eastern is when most of the banks and institutions complete their order flow, okay? And as the banks and institutions are completing their order flow, we see that many times if price is arriving in a zone that we have marked on the quarter hour, top, bottom, or quarters, okay, that this trade, and it's got to be on time, okay, the trade is more successful. Okay, so if price arrives in this prep screen zone earlier than the quarter hour, earlier means anywhere from about 4 to 5 minutes early. Often you'll get a little bounce. Everybody will start feeling good, try to rush in, and then the zone will fail. Okay. We do have a potential right here, 38,155, 38,088 as the Dow is approaching. Russell, we're looking for that lower zone. Okay. And that's right about that 1974. When we take a look at the leg candles leaving, see, we have a leg base group of candles. Okay. The leg base group of candles is something that we pay close attention to the location is very important when you're looking at supply and demand trades. Location must be below or in a buy territory, and that is below a resistance area. See, this is where the sellers were pushing price down, and when there were no more sellers, price lifted out of that. Okay. What it left was a footprint where there are still unfilled orders to get into. Now, the details that I'm going to briefly express here is that when you're looking at that group of candles, leg base, okay, this is one of our signature pieces of information, because when we go back and look at any place we desire to make a trade, if we reduce the time frame or increase the time frame, we will find that that leg base is always present. Now, when the leg candles leaving the zone are bigger than the leg candles in the zone, often the zone can be used twice. First time it touches, it's usually a proximal line entry, and the second time, price goes deeper into the zone. So just after the open, we're going to look for a bounce back up, okay? As we're looking for that bounce back up, then we're going to look for price to come back deeper into that zone. And we're going to use that deeper zone, which I mark with the 88.6% retracement. See, things get really specific, okay? And we'll look for the next opportunity to go long right there about that 1969, 1970 area where we have that second test of this zone, okay? So 1974, 80-ish, okay? We're going to look for an opportunity to go long in about 11 minutes as the market opens. The internals, the VIX is back up, okay? More fear coming into the market. The trend is still low. There's more downticks and down volume than upticks and up volume, okay? And tick and advancing issues over declining issues not open yet. Now gas, crude oil, okay? So we had a breakout on the crude oil, okay? On the 120-minute chart, we are looking for anywhere in between 82.23 to 80.73. We may find some leftover buyers down here, okay? So make sure you're doing your research, okay? We see that there was a little consolidation right there. Inside that consolidation, we can then look for the leg base group of candles. I believe it was like on a 1-minute chart. You want to have something that's very consistent and specific. And as we look for that leg base group of candles, okay, we have a leg in, the base, leg out, and the base. And we've got two of them right there. Now we covered this all in our Mastering the Charts part 1, okay? So what we're doing right now is we're seeing, hey, that leg base group of candles is present. And as we mark that area, we see the price change direction. So there are some unfilled orders right there, okay? Now, as price moves back up, we're going to look for where we have the unfilled sell orders, and they're pretty far away, okay? So I'm going to have to step out of this trade right at the moment, okay? And wait for
order filled.
The next opportunity. All right, so we are now just about 9 minutes away from the market open. Let me go back over a couple more trades, and then we'll step out of the live stream session and we'll join our community trading room. Right now, we're seeing the lead 5-year, 10-year, and 30-year notes and bonds. They're still dropping, okay? Now, these tend to lead the market before the equity indexes. We're always monitoring the bonds and notes. In these market conditions, the equity indexes and the bonds notes have been correlated. Dow, this first demand zone is in the wrong location to look for a change in trend. So you're not going to stay too long. And that's important information to realize. NASDAQ, larger time frame demand zone, 17,215, 17,147. Still has a way to go. S&P, demand zone. Okay. 5,021, 5,005. Russell, as it approaches the demand zone. Okay. 1967, 1962. Other charts to watch and monitor. Okay, we saw a good move up on the gold, silver earlier, okay, and since they have dropped back down, okay. Looking for that breakout trade on silver and gold, along with platinum, okay. Now, platinum on a large time frame did dip into the zone. We can look for that entry on platinum, 912 and 28 cents, okay. I'm going to look to enter that one here just after we get done with the live stream, okay. Copper looking for a pullback, 4.47, 4.47, 4.44. We do have soybeans looking to come down to a demand zone. We may have an opportunity to take the breakout of that support down to that demand zone and then look for the move back up. See, all we're looking for is where we have unfilled buy orders, unfilled sell orders, and we're looking for where that price changes direction now, okay? All right, so we're about 7 minutes away from the market open. Let's go join our community trading room. And for everybody that's on the YouTube live, check us out. Come and sign up and be part of our community trading room and our live trading sessions where we go in much greater detail on all of these things. Thanks, everybody.